Hey everyone, welcome or welcome back. Uh, right up front, I want to say that I'm not any kind of economist or monetary theorist or anything like that. I've had a few economics courses in my university days, but I'm no economist. However, I do have a science background, and I'm very familiar with the scientific method of inquiry both in the field and what we used to call library research. So, since 2008, for the last 7 years, I've been researching uh, the economic situation, fiscal policy, monetary policy, the whole economic mess. So, what I'm presenting here is not just my opinion. I mean, I agree with these people, but the thoughts aren't original with me. These are from reputable analysts in the field of economics and monetary theory, that type of thing. And they're all across the political spectrum. Now, this is not just from the right or the left, and it's not from people, mostly, there are a few, but mostly it's not from people who are selling gold like Peter Schiff or selling a book like Tom Hartman. Uh, no, no. This is mostly from people who are selling nothing. They are just concerned about the situation. So, why is an economic financial crash of significant proportions due relatively soon? And by relatively soon, I mean any time within the next 2 to 3 years. So in other words, it could be tomorrow, it could be next week, it could be, next month or next year, whatever. Okay, here we go. First of all, China is already dumping dollars. They've dumped billions of dollars already. They're getting out of the dollar business. That's important in terms of America's, or rather the dollar's status as world reserve currency. Many countries, such as Japan and Russia, Japan and India, China and several countries, and many Asian countries, have formed currency swap agreements, meaning they're going to totally bypass the dollar. This means that countries no longer are interested in financing our debt. Another indication of that is that ever since the 2008 crisis, the Fed has been the one that is buying T-bills, treasury bonds. They're buying the great bulk of them. That's not sustainable. The Fed, before the 2008 crisis, had a balance sheet of about $1 trillion. Now I think it's $4.5 trillion. They can't just keep going up and up and up like that on their balance sheet. Many of these analysts agree that stocks and bonds here in this country are in a huge bubble that's about to burst, according to them. In other words, the stocks and bonds are highly, highly overvalued. The same is true with real estate, though to a slightly lesser degree. The global debt bubble is now at $200 trillion. It's never been that high before. Many of these analysts think that it's about to burst. They all agree the derivatives bubble is currently, the best estimates, at $1.25 quadrillion. A quadrillion, 1,000 times a trillion. That's many, many times more than the entire world's GDP. It's a threat to all of us. And the mega banks and insurance companies are responsible for that. Another indicator that a crash is coming, the U.S. bond auction, that's how they sell our debt, and really they're not selling anything. When they're selling T-bills, what they're doing is they're begging for a loan. Anyway, one of the most recent ones, according to the Wall Street Journal, they offered a bond at 0% yield. In other words, you pay for the bond, say it's a $100 bond. Well, when the time term has expired, you get back $100. What a deal. What a bargain. So what they're saying, the Fed, what they're saying without saying it is, our money is, our currency, excuse me, there's a difference between money and currency. Our currency is somewhat worthless. So we're offering this bond at 0% yield. The analysts say that the stock market has been propped up, and the real estate market, and the bond market, everything in the so-called asset bubble. That's been propped up by 7 years of almost 0% interest, and all of the quantitative easing that the Fed has done. In other words, the Fed buying bonds. And you know, a lot of these people that look at this, they think that money's going into the economy. It's not going into the economy. It went into the mega banks. And the great bulk of it has stayed there. Or the mega banks like Goldman Sachs, JP Morgan Chase, they've used it to invest in no job producing ventures such as foreign currencies or bizarre financial derivatives or gold and silver. JP Morgan Chase reportedly has a couple 100 million ounces of silver in its vaults. Not paper silver, physical silver. So all of those trillions of dollars that the Fed essentially gave as loans to the mega banks, just several of them, you know, not 100 banks, more like 7. All of those trillions of dollars are still there, or invested in the things I just mentioned. So it didn't get into the economy at all. The Fed saved the mega banks, not our economy. Basically, the analysts are saying the Fed is out of tricks. Their bag of tricks is empty, because if they raise interest rates, essentially, what they're going to do is crash the stock market and the bond market and the real estate market. And we'll be in a deep recession, possibly even a depression. If they don't raise rates, which they haven't yet, at the September Fed meeting, they decided not to raise rates. They basically said, party on, folks. Let's keep the Ponzi scheme going. Anyway, if they don't raise rates, the bubble will eventually burst, the asset bubble, possibly the derivatives bubble as well. All right, another reason that a crash is highly probable, and I should state, I don't deal in absolutes. You know, some of these analysts are saying, well, it's going to happen before the end of this year, 2015. Some say it's going to happen in 2016. Some say it's going to happen in 2017. So they all agree it's going to happen, according to them. Excuse me. But the only difference, the only disagreement is when it's going to happen. I don't deal in absolutes. I deal in degrees of probability. So what I'm saying is it's highly probable that a severe crash will occur within 2 to 3 years. Tomorrow, next week, next month, next year, I don't know. No matter what these guys tell you, they don't know. They're making a best guess, an educated guess. But I'm not going to pick a year. There are too many variables involved to do that. I think it's impossible. But anyway, another reason that we're looking at a looming crash, at least a high probability of a looming crash, since the year 2000, about 60,000 factories have closed and or moved to China, Malaysia, Indonesia, etc. And the associated good-paying jobs with them. So, despite what the government says, the real unemployment rate in this country, according to these analysts, all across the political spectrum, is somewhere around 20%. It's not the 5 point whatever percent that the government and the corporate media claim. No, it's somewhere near 20%. Wages essentially have stagnated for the last 30 years, while the upper crust's income went up 700%, by the way. Now, why is all this important? Well, because consumer spending drives about 70% of our economy. The government, or especially the corporate media, would have you believe that it's the stock market that's the most important thing in our economy. No, it isn't. It's consumer spending. And if people don't have spare money, then our economy is going to tank. If they're just scraping by, I read one report, one study, that said 50% of working families in this country are economically insecure. They're just barely getting by, just scraping by. Are they going to be doing a lot of spending? I don't think so. So for all of these reasons that I just went over, the analysts that I've studied, their lectures, their writings, their interviews, they all predict that a severe crash, much worse than the 2008 crash, is coming. They just disagree as to when. I say a high probability within 2 to 3 years, any time within 2 to 3 years. So think about that, and if you want to know more about it, you can go to my blog. There's nothing to buy there. You can go to my blog, go to my channel, YouTube channel page. In the upper right, there are some links to my art sites and my blog, which is individualsovereignty.blogspot.com, and you can get more information and what you can do to prepare for the high probability of a crash in the relatively near future. That's about it. Thank you very much for dropping in, and everyone be well. Bye-bye.